Now, President Biden just announced recently during this big clean energy summit that they plan to reduce the carbon emissions in the United States by 50% in a very small period of time. And this leads basically to one answer, and that's going to be uranium. And so in today's episode, we are talking to the one and only. It is the Uranium Insider, Justin, now become one of my good friends, a regular on our show, and one of the experts out there in the entire uranium industry on what stocks to buy, what are undervalued, and how do you make the most out of this incredible uranium and renewable energy movement that's taking place. He has an amazing newsletter. I am a paid member to it. So if you're looking to understand the entire macro framework of what's going on and the ins and outs of the best uranium mining stocks to buy, the link to that is right there down below in the description and pinned to the comments. You'll see the link right there down below. I've gotten some amazing comments from people saying how stoked they were that they got into Uranium Insider from our last video and how well it's panned out. So be sure to check that out in the description and comments right there down below to join Uranium Insider. Make sure you hit the like button on this side right over there or that side, wherever you might find it. Subscribe, bell notification, all that other good stuff. And last but not least, just a shout out to our uranium sponsor, which is Standard Uranium. So have an absolutely great time enjoying this episode as we learn the ins and outs of what's going on in the uranium market. So what's up, Justin?
How you doing, Jake? Good to see you.
I'm doing good. I'm doing even better now that I saw that Biden said he was going to somehow eliminate our carbon by 50% in 14 days or whatever crazy number it was, because it makes me go, well, how are we going to do this? I mean, in any way, governments never achieve their goals, so I'm sure they won't achieve it. But the only answer to even move in that process seems to be uranium. So tell me some of the bullish sentiment you've been seeing.
Yeah, it's obviously good news to see the Democrats who are in charge of the government at this present time be at least accepting about nuclear. There's been multiple mentions about nuclear. Biden's climate czar, John Kerry, formerly anti-nuclear, now embracing it. There's definitely been an increasing acceptance of nuclear. In some cases, actually very bullish on expanding nuclear, primarily with what's referred to as advanced nuclear, which is sort of the future expectation of an implementation of SMRs, or small modular reactors. But at the very least, what it's most bullish on is existing plants remaining online. There's very strong language coming from the senator, I'm forgetting his name, it's a Democrat, Senator Manchin, saying basically any of these utilities that are attempting to take their plants offline, they need to come and make a really strong case and justify their decision. And the government should absolutely be supporting this. So, the timetable, at least in the States, for new builds is a very, very long time, as we're seeing currently with Vodal that's still under construction. I think we're north of 10 years at this point. So it's not bullish in the sense that we expect the United States to now embrace the build out of new large reactors. I actually don't expect that to happen at all. But it is bullish in the sense that the plants that are slated to come offline, or at least kind of teetering on the chopping block based on having to compete with natural gas, wind, solar, et cetera, in these deregulated markets, they are much, much more likely to get the support they need from the government to stay online in these competitive energy markets. So that's probably the most bullish thing as far as, looking at supply and demand. But in general, just seeing increased positive sentiment around nuclear from the political side that we never expected to see it from is kind of a sea change. So it's quite striking to see it.
Yeah, because they were the anti-nuclear side, right? And so it's
For sure.
interesting to see. It's nice to have one thing in the world that isn't turned into a political divisive tool. It seems like everything else is. And so that's nice to see on both sides of the spectrum. Now, let's talk a little bit about the uranium market. One of the reasons I'm so excited about it is because I think it presents one of the most compelling investment opportunities that's out there in terms of how undervalued it is, but more specifically, I mean, how high these stocks really can run. And since the March coronavirus lockdown sell off, some of them went up 10x, many of them went up a lot, and so I kind of got used to these stocks going up 100% every month, and now it feels like they're broken. Because so tell me what's wrong? Why aren't they going up 100% every month anymore?
Yeah, they're crashing down to the rising 50-day moving average. No matter how solid fundamentals are, there are going to be people in the market that are going to take short-term profits. And what we're seeing right now is, from what I can tell, just a healthy pullback. These stocks, almost all of them, are still way above their rising 200-day moving averages, which is, very much a bullish signal for the stock charts. The sell-off is low volume, and we haven't seen any market outflow of shares from the ETFs. That would signal institutions and smart money that has been piling into these stocks December, January, February, of taking profits and bailing out. That's not happening. So what I think is happening is the institutions are sitting there like alligators, waiting for the time to pounce and letting retail sell these things down, because the spot market price is dropping, which we know retail is, that's what they follow for the most part. Most of retail doesn't really do any significant depth of work to figure out what the hell's going on behind the curtain. So the one indicator that everybody can see on a daily basis, when that moves down, some of retail is going to react. So that's what it's looking like here, and that's how we're treating it, is a buying opportunity, and what's, I believe, going to be a continued bull market. Yeah.
So I want to get into a little bit more about the spot market. We can talk about China revising its 2030 plan that involves uranium. But first, you said this is presenting a compelling buy opportunity. So let's talk a little bit about how to play that. Of course, you run Uranium Insider, and that's what your newsletter is all about. And for everyone listening, the link's in the description and pinned to the comments right there down below. I highly recommend it. But give us an idea of what you mean by that, on how to play it and how you guys are looking at it at Uranium Insider.
Sure. Yeah. Well, what we've recommended and what we've done is enter positions in multiple tranches. So people that have joined the newsletter in the past few months in a pretty sharply rising market, we got a lot of questions. Did we miss this? Did we miss it? Are we too late? So no, you're not too late, because we'll always have dips like we're seeing right now. Even in a long-term, 3+ year bull market, there's going to be these pullbacks. Some of them could be substantial, 30, 40, 50%, like the previous bull market. And so entering into positions in tranches, I think, is a really intelligent way to do it. 3, 4, maybe even more, spread out over a number of weeks, maybe even a number of months. So that's been what we've been recommending. And obviously we have the companies that we recommend in the newsletter. If somebody hasn't done a lot of deep work on the companies available in the space, and they're not, a member of a newsletter like ours, or have somebody doing work in the background to try to filter out some of the noise, because every single company is going to tell you that they're the next big producer and they've got the next big thing, and they're just about to hit this deposit, and they're close to development, blah, 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 blah. So you really need to do independent research to kind of make those comparisons and generate alpha in the space, beat the market. And there's a number of ways that we do that. And I think that we've done a pretty good job so far. Since inception, which is, we're almost at 2 years, about 18 months, the newsletter's been open. The price of the actual commodity is up 13%. URA is up 78%, and our portfolio is up 263%. And so the way that we've done that primarily is by finding companies that have, or will have, or are likely to have individual company catalysts, because the market is going to do this on its way up. And there are moments when either the broad market influences the stocks down, or the market just takes a rest, and the companies that can continue to move forward forthrightly with their plans and generate shareholder value despite what the market is doing, those are the companies that really outperform when the market is flying. And that takes research. I mean, you have to not only just dig into the company's prospectus and their investor presentation, but contact the company, get to know the management, find out what the hell's going on, what are their plans, what have they done in the past, how did they treat the shareholders during the bear market is something that we really looked at, especially before the bull market started to take off in the past 6 months. And then there's also things like share structure. We always like to look at the shares outstanding relative to outstanding warrants and options. We like to look at obviously jurisdiction. Don't like to make bets on jurisdiction, whether or not it's possible that that jurisdiction might support or might not support a project. That's not a bet we like to make. And then obviously, I think companies that can get into production or at least move legitimately towards production over the course of the bull market are really the companies that we like a lot. Those are the companies that we've positioned our members in and continue to look for as the market progresses.
You're a lot more detailed than me. My modality is basically, it depends how strong the coffee hits me. It's like how many shares I buy of something. No, I'm just joking. But that's awesome. Yeah. We love to hear that and learn some more of the details. It is exciting. Also that there's just not that many companies. And so, you aren't sorting through 700 companies. You're sorting through, between all of your fingers and my toes and your toes, we pretty much got the market pretty much maxed out, which is exciting. And that's why I've been kind of beating the drum with this, because I do think it's a really compelling opportunity. Now, let's talk a little bit about how long do you think that this market lasts? Is this a 2 to 3 year thing, or is this a 10-year hold?
I wouldn't say it's a 10-year hold, only because I think that the market will peak out and pull back. Probably kind of similarly, not necessarily with the price levels, but in a similar manner as it did before. When the price spiked, over $100 in 2007, then it kind of came back down to reality, started to settle out in the 50s and 60s. And that was before Fukushima. So it dropped back down from north of 100 to I think about 40. Then it started to rise back up into the 50, 60 range before Fukushima happened. So I think, it's highly likely that we'll see a price overshoot and then a price adjustment back down to a level that makes sense. That's kind of what we're likely to see, in my opinion. And I think that between now and that price peak is probably somewhere in the 2 to 4 year range, would be my guess. It is possible that it goes on for longer, and that's just something we're just going to have to watch as it goes. But if you're entering the space now, I would expect to have 2 to 4 years of patience, just for the whole thing to play out. I do think that we will stay in a bull market currently and until that point. But that's kind of where I'm seeing it, I think.
So how much longer till we get there? I mean, it seems like every day we hear these China opening this thing. China says they're going to change their plan and do this. This country says they're building 6 more new reactors. But the price is still at $29, and all these companies supposedly bought all this stuff off the market. It's hardly made a dent, and it's just so opaque. So tell us what's going on and what you think are the next catalysts to watch for.
Sure. I think the how long question really is what we're asking, is how long until utilities step up to the plate and start buying some damn uranium, right? I mean, that's the piece that's missing so far, and that has been largely missing the past few years. It's been multiple years where the writing's on the wall where this market will eventually go, but the utilities have stayed out of the market for the most part. They've been purchasing on relatively low volumes in the past few years, accumulating much of the mobile inventory that was the oversupply from the previous decade, primarily through carry trades where traders will buy the physical uranium, typically sitting at a conversion facility, and sell that to the utilities into the future, out 1, 2, 3 years, getting their borrowing costs back plus a little bit of profit. Carry trade really did a lot to work through that mobile inventory. It's kind of, the carry trade thing is sort of a bad word in the uranium space, but really there was a function for those traders to actually work through that supply. Utilities played it beautifully. They really did. There was a lot of extra inventory. They built it up. They've been drawing that inventory down. They've been accumulating on small volumes up until this past, let's say, 12 to 24 months, where the purchasing by utilities has really fallen. And I think what's happening right now is that the utilities know that the spot market is thin, and they're not going into the spot market because multiple reasons. A, they're already starting to recognize that there's competition there. There's non-producing companies buying spot. There's traders buying spot. There's producing companies buying spot. There's physical funds buying spot. And now there's institutions entering the equity space in the past 4 months that they expect will be buying spot. It's going to be a very crowded trade at some point. So crowded that it's not going to make sense to even be there. And the price rise in the spot market, in my opinion, is not going to come at the hand of the utilities unless there's, let's say, a supply emergency where they need to act now and get what they can. I don't think that's going to happen. What I think is going to happen is that the spot market is going to be left up to these other players, and utilities are going to be forced into the term market because the spot market is going to fly if they come in heavy-handed because there's not much there. Also, some utilities have contracts that are still carried out into the future. Most do. Some of those fall off pretty quickly in the next couple of years, especially in the States. The majority of the US utilities are uncovered out past 2023. More than 50% do not have contracted deliveries 2023 beyond. So what that means is these contracts largely are partially spot reference, partially term, so partially fixed. So that means that 40%, let's say, for example, of a contract is fixed at X price. These contracts that were signed in the middle part of the last decade, out for delivery 5 to 10 years, probably signed in the 40s-ish, fixed. And then the spot reference price is upon delivery of that uranium in the contract, they actually pay the spot price at that time. So to the extent that they come into the spot market to buy a little bit of pounds here and there, and it moves the spot market up, that actually affects what they're paying on their contracted deliveries as well. So I don't see the utilities coming into the spot market in any reasonable volume, but that's not necessarily a bad thing. What we're really waiting for is the term market to start moving. And when that does, in my opinion, is when these other players, especially financial players, could come in heavily into the spot market, and we'll see the term and the spot start to move simultaneously.
When does the term market move, or what needs to occur for people to come to the table in the term market?
Well, I think that we're sort of in that phase right now where we're going from that buyer's market to a seller's market. It's slowly shifting. So we're hearing from the likes of Cameco in their conference calls stating that off market, they're having more discussions with utilities about term market contracts, about mid and long-term contracts, more discussions than they've seen since Fukushima. So the interest is coming back. And where we're at right now is this place where the utilities are trying to negotiate a certain type of contract, and the producers are saying, essentially, no, we're not going to do that. Utilities are asking for, in general, something like a base escalated contract where they're wanting to pay a fixed price of X, probably in the mid 30s, and have that price escalate year over year, essentially adjusting for the expected increased cost of capital. And the producers are not going for it. They're saying, no, we're not willing to do that. We know where this market is going. Cameco wants it in the 40s at least, as far as the fixed portion, with the spot adjustment, because every producer on the planet knows where the price is going to go. 5 years from now, maybe even sooner, probably sooner, it could be far, far north of that fixed portion of the contract in the 40s. So we're kind of in that weird place where we're seeing negotiations between the producers, finally, between utilities, which means that utilities have recognized that, okay, all of these aspects of the fuel cycle are rising in price. Demand is increasing. The spot market is thin. The carry trades are not at the price and volume that they have been in the past, and they're slowly sort of drying up. Secondary supply is diminishing because demand for enrichment is growing. All of these things are slowly coalescing, and those discussions are happening now. So what we need to see is confirmation on market, not off market, that shows that there have been these contracts happening. I think that we could see that this year. And if we don't, then we are increasingly looking like there will be a much higher price spike scenario rather than a slower rise in the price. So basically, it's an inevitability. Does it happen next month or next year? That's anybody's guess. But the scenarios of how this will play out are determined by how soon the utilities will enter into this term contracting situation. The nuclear fuel consultants, the two primary ones, TradeTech and UxC, are telling two very, very different stories. UxC is not telling the utilities, hey guys, time to buck up. They've had a couple of sort of soft warnings over the past year that go out to the utilities that are saying, eventually you guys are going to have to pay the cost of production. You know that, right? Hint, hint, elbow, elbow, nudge, nudge. And TradeTech is coming out with very, very bullish price scenarios and very dire looking supply scenarios out towards the end of the decade. And the utilities are seeing both, and they're trying to negotiate that. So right now they can go in and buy 1 million pounds here or there at the current prices for delivery this year, maybe into next year. If the utility actually wants to buy multiple millions of pounds for delivery 5 years plus, they're not paying the current prices. So it's just a matter of those transactions coming to fruition and the actual contracting cycle coming back to the table, which will happen. When it happens, I don't really care when it happens, to be honest with you, because it's an inevitability. It's not an if, it's a when. And if it happens 6 months from now or 12 months from now, I don't care. The longer they wait, the harder the price is going to spike. And barring a catastrophic, nuclear meltdown or something, this is going to happen. So that's what we're betting on.
Yeah. So tell me some of the other stuff you were talking about. China revising its 2030 plan, and you were talking about CGN getting a 49% stake. So let's talk a little bit about some of these other, if we get outside of the wins and we get outside of what's happening in equities, uranium equities, then give me an idea of some of these other things going on in the market.
Sure, yeah. So China last month released their 14th five-year plan, where they basically kind of just lay it out what they're planning on doing kind of generally in the energy space. And with their nuclear plans, they had stated a goal of reaching 100 gigawatts by 2030. They're currently, I believe, at about 47 gigawatts. And so basically that's roughly, gosh, I had the math in my head. So we've got 53 gigawatts by 2030. And they have, I think it's 17 reactors under construction now. They need to build like another 35 reactors this decade to reach that goal. That goal was revised up last week to 120 gigawatts by 2030.
Wow.
So they're continuing. And I saw something today that said 180 gigawatts by 2035. I mean, they're going all out nuclear right now, all out. I mean, they're growing so fast on all fronts. They're building coal plants and gas plants also, but they know that nuclear is just such a reliable base load that's clean. They've got major air pollution problems in China, primarily from coal burning plants. So it's really an incredibly strong demand story that China is, and they don't appear to be letting up on that. And it seems like they're following through. Will they hit those numbers? I don't know. They'll at least get close. They tend to at least get close to their goals. And they're certainly going to try, from what we can tell. And another piece of news that came yesterday was that CGN Mining, China General, they announced that they sealed a 49% stake in a Kazatomprom project, Kazatomprom subsidiary. It's Ortalyk, I think. I don't know if I pronounced that correctly, but the Ortalyk has two deposits. They produce around 7 million pounds a year. So roughly they're getting 3.5 million pounds a year from this. The interesting part about this is They paid $435 million for the stake in the project, and they still will have to pay for the pounds produced coming from the project. And what this deal sealed for them is a guarantee that 49% of what's produced will be offtake to CGN, and they will pay the spot price minus the 2% discount. So they essentially have paid $435 million to secure pounds that they will still have to pay for. Yeah. So
Why? I mean, I'm trying to sitting in my
security
head
of
and I'm like,
supply.
is this a trick question?
It's security of supply.
Okay.
So the big stakes. So they have a 20% stake in Fission, and it's a similar deal. The metrics are a little bit different. The discount, I think, is greater than 2%, but it's the same deal. They paid for an equity stake in the project in the company, and they're still going to have to pay for that offtake
to get Fission's offtake.
Yeah. China purchased the Huhn mine in Namibia a number of years ago and have had major problems in that production. They've still got a decent amount of production coming from that, but it's cost them billions to develop this mine. And they're obviously now taking a different approach with this offtake in Kazakhstan. Kazakhstan is reliable. They're pumping it out. Their ISR production, it's very different from Namibia, very low grade open pit mining in the desert. And this is ISR in these deposits, in these aquifer deposits. But in my opinion, this really speaks loudly to the importance of security of supply, and especially to China, based on these growth numbers that we're seeing. And it also means that these inventory numbers that we expect China has, I've heard anything from 300 to 400 million pounds of inventory. Somebody on Twitter mentioned the other day, they've got 600 million pounds. They're not going to do anything. And then literally 2 days after that comment, oh, they just paid 435 million just to be able to buy this stuff out for the next 20 years. It's a big deal. It really is showing that China is stepping up to the plate. They're doing what they need to do when it comes to securing their energy out into the future. And security of supplies is number one. Mike Alkin was right. All of these years, security of supply is all that matters. And China's, they're getting the first mover advantage here.
If they were doing what China's doing. And so do you think China just already knows what type of role nuclear and uranium is going to play, whereas the Western governments just may not be there yet? And China says, hey, look, this is the only option, and supply is a lot tighter than we think. We're going to have a huge bump in the amount of demand. And they're just getting ready for this obvious situation. And does it also show that the supply demand fundamentals are even more out of whack than maybe we're even thinking, if they're willing to jump in on something like that?
Sure. I think it has to do with China looking out for China. I think that they have probably very clearly modeled out what their demand needs are going to be. I mean, they're thinking in terms of decades, and the utilities, especially in the US, are thinking in terms of years, maybe even months at this point. So it really has to do with the length of time that their view of the future is. And so far, the utilities generally over the past decade have not had a supply problem. They've gone into the market for the pounds that they want. They pay what the market is asking. It's been relatively cheap and abundant for a long time, and so there's momentum there that carries momentum. But what China's doing is they're saying, okay, we're shooting for this many 120 gigawatts of production in 10 years. What does that look like in demand? How much pounds are we sitting on? We're going to have offtake from Langer Heinrich. We've got Huhn. We've got potential production from PLS, from Fission. We're going to need some more. We've got some JVs in Kazakhstan. We've got some contracts, and there are Chinese utilities that do sign contracts. It's not all, it's not all just one China that's doing all of the purchasing and the production and the acquisitions and the build outs. So all of that combined, and they're still acquiring projects. So what that means to me is they're looking out farther into the future. They can see that there is some level of insecurity about supply, and they intend to shore that up. That's what it says to me.
Yeah, very interesting. I mean, you definitely can't argue that their government is certainly one smart. They're definitely smart, and so I find it very interesting to see that, especially with the type of rhetoric that the U.S. is. And I think the U.S. hosted China at this clean energy summit or whatnot, or is hosting them. And so I thought it was ironic that while Biden said that, at the same time, China comes out with these announcements, but the U.S. comes out with no announcements for nuclear and uranium. So I find it quite interesting.
Yeah. Yeah. I think the US so far has been a lot of talk, and China's been a lot of action, I think, on multiple fronts, but definitely in the nuclear realm as well.
So are we going to need the spot price to move before we get another rally in equities? What's going on?
Well, not necessarily. I mean, the
Because I
spot
want my
price
stocks to go up 100% again. Okay.
yeah, they will. I can't tell you how soon, but I don't think we're that far off. I think we're going to see a bottoming here in the spot market, in my opinion. We do know that Cameco still needs to buy a significant amount of pounds, and the move that went from 27 to 31 over the course of a few weeks was based on not a whole lot of volume. So there were a lot of deals that were announced. Denison bought 2.5 million pounds. UEC bought, I think it was a little over 1 million pounds. Boss came in for a bit. Encore came in for a bit. Uranium Royalty came in for a bit. So it doesn't take a whole lot of volume to actually move the price. And Cameco's still got to come in for somewhere around 8 million pounds, I believe, over the course of the rest of the year.
This year, they have to come in for 8 million more?
Yeah.
And that movement was like basically about 4 million, all those companies, right? So that's like double the amount of volume.
Yeah. I think it might have been a little bit more than that. But it also, I mean, one crazy note was Denison's 2.5 million pounds was secured over 17 transactions.
Wow.
And for delivery out to September. So there just isn't a big chunk of uranium available in the spot market in U3O8 or UF6 that's available at these prices for a single transaction to come in and swoop it up. It's trickling in from the producers that produce into the spot market. There's a few of them, and there's maybe 15 million pounds of U3O8 that comes in each year that's dedicated basically to selling into the spot market. But so we know Cameco's got to come in. Kazatomprom might come in for a bit. We don't know how much they're going to buy, probably a few million pounds, maybe a little bit more. It really depends on what their production is looking like. They're still guiding for a normal production year. I think that they're betting on the second half of the year cranking out production based on the well field development that they've done in the past 6 months. I think that their production right now is definitely being impacted from the shutdown last year. But the spot market is probably going to bottom here. It's probably going to move back up as soon as we see some of that more buying. But what's really going to move our equities is when, in my opinion, when institutions take in and step in again. And I think that's going to happen again. The reason I believe that is because we haven't seen any funds, institutional funds, come in to buy spot yet. So we think that they're going to continue to position the equities prior to making that move. And
you're saying that you expect institutions to come in and buy more equities before, or is that what you're saying?
Correct. Yeah. So I think the institutions are sidelined right now. They're not selling based on the outflows from the large caps and the ETFs. The volume is low, and I think that what if I had to guess, what's happening really right now is institutions are on the sideline, letting retail sell this thing down on low volume. They're going to get their 20-30% discount to the highs of last month. They're going to come back in, they're going to reposition, continue to grow those positions. And at some point this year, they're going to come into the physical market. That's my expectation.
But they will not. When you say physical market, we're talking then about coming into the spot market.
Correct.
But they won't do that until they're totally positioned in equities. And you're saying you believe they still have another round of positioning to go.
That's what I believe. Yeah.
Because we've really only seen one round of positioning by them. And that was this move in December up until whatever, like
December to February. Yeah. Big volumes into the ETFs and big caps for sure.
So that movement that we saw, a lot of these stocks double, triple, whatnot, that was a first round of institutional money getting their position.
I believe so. Yes. Yeah.
And so you think that their strategy is get another round of position and then move the spot market and watch the equities go bonkers.
Correct.
That sounds like a good prediction to me, my friend.
Yeah.
So, all right, then let's talk a little bit about as we kind of wrap up here. Can Cameco wait any longer? Or are they going to need to come in and get these 8 million?
It depends on their delivery schedule under their contracts.
Got it.
So yeah, they have a certain amount of inventory that they need to maintain. Essentially, they're not going to draw it down to zero. So it really depends on the time of delivery for the contracts they have on the books to deliver to this year. So it's I don't think it's extremely dire, but we're already in April. So it's unlikely they're going to wait much longer to buy some of it. Do they need to buy all of it at once? I don't know. They came in heavy last summer after they closed down Cigar last April and May. Cameco was basically almost that entire move last year in the spot market, April, May, June. So, but you know what? They've always said they don't want to be the buyer of last resort. They don't want to be the only one in the spot market. So I think that seeing all of these other players come in has probably got their attention. Every time we hear Tim Gitzel or Grant Isaac from Cameco speak in conference calls or in webinars or anything like that, their language is more bullish than ever. And I think they finally have utilities in the position that they want them in, which is the market has finally come around to the point where they have leverage to get what they want out of the contracts that they want in order to support McArthur River coming back online, which is really what they want. And they're not doing that without signing probably a couple £100 million into term contracts at prices that justify that reopening.
Yeah, whether I've talked to John at Standard Uranium or whether I've talked to Amir or whether I talked to Scott at URC or Brandon, it seems like anyone who is a CEO or in a position that's involved in these companies. I told you Rick Rule said to me yesterday that he's going to be buying heavy over the next 4 weeks, even though he thinks the valuations are too high given the spot price, because he's afraid that the market's going to take off again. It seems like the languaging is everyone is so certain and so positive that's been pretty interesting to watch. I'm sure it has for you, having been in this market for so long, right?
Yeah, for sure. I mean, I think that the language coming from the investing side and from the companies in the space has been bullish for years and years. And what's exciting now is that we finally have price confirmation on the equities. And so that, with the foundation of positive fundamentals that grows by the day underlying the recognition that institutions have now recognized this as a space they want to be in. So that whole picture is really what makes us so bullish on it. But yeah, you can talk to anybody in the investing side or people who understand the ins and outs deeply of the fuel cycle, and they'll all tell you kind of a similar story, which is we're seeing the prices on the back end of the fuel cycle shore up. SWU, the price of enrichment, separative work unit, is sorry, I forgot to silence my phone. The cost of enrichment is in a bull market. That's been rising steadily for a couple of years now. Conversion is up, UF6 is up, U308 is up. It's just not up as much. So the actual metrics of the fuel cycle are showing that demand is growing and supply is dwindling, and secondary supply has fallen substantially, and that's a big sign. On some supply demand modeling, you'll actually see inventory drawdown counted as secondary supply, and it's kind of an interesting thing because it sort of acts as secondary supply. Utilities, let's say, drawing down inventories as opposed to procuring in the market, it acts as secondary supply, but those pounds are counted twice. They're counted as pounds when they are produced and they enter the fuel cycle, and they're counted when they are drawn down from inventories, which is really interesting. And that's something that one of the consultants, the nuclear fuel consultants, will count inventory drawdown as secondary supply. And it's, in my opinion, it's a pretty false metric to go by. So we're seeing tails re-enrichment and underfeeding significantly decrease now, which that's the primary secondary supply that comes into the market as new supply is drawing down substantially. So that's also a really good sign.
Sounds like a bunch of cheaters trying to keep the game together a little bit longer. So for everyone listening, obviously this is exciting market. Some people were the stocks really took off. And so some people didn't get their opportunity to get in. We've had an irrational sell-off by average retail investors like us that don't understand the big money is not selling off. The big money's buying. I mean, you're starting to see that some good days again, still some amazing buy opportunities right now. We've got Justin from Uranium Insider. So Justin, give us a last reason why we should check out Uranium Insider. I've got the link in the description and pinned to the comments right there down below. But give us a last reason why someone should come join Uranium Insider.
Sure. I think the primary reason would be that it's a complicated sector and we're 100% focused on uranium. So we live, eat, and breathe this stuff every day. And we communicate frequently with our members, updating them on new positions. And we've done a good job so far producing alpha. So everybody wants to beat the market, and that's what we try to do for our members. And we've done pretty good so far. So if you're interested in diving into the sector and staying abreast of all of the moving parts and all of the news flow, as well as having recommended companies based on our research, then I think there's a strong value proposition.
All right, so we got Uranium Insider right there down below. I am a paying member myself. I do highly recommend it. It's right there down below. Make sure you hit the like button on this side right over there and this side right over there to send this video out to more people out into the YouTube universe. Comment down below. Go Uranium, go right there down below. If we get enough go Uranium, go comments, it's highly likely that it's going to move the spot price. So make sure you comment down below. Go Uranium, go. And it's good to see you, Justin.
You as well, Jake. Thanks a lot, man.